Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about WYNDHAM HOTELS and RESORTS INC quarterly report. WYNDHAM Hotels and Resorts offers a diverse range of businesses and services to third-party hotel owners and others. The company's portfolio includes hotel franchising licensing its lodging brands, full-service international managed business services, guest loyalty program management brands such as Plus Super 8, Days Inn, Travelodge, Microtel, Howard Johnson, La Quinta, Ramada, Baymont, American, Wingate, Wyndham Ultra, Wyndham Garden, Ramada Encore, Hawthorne, Trademark Collection, TRYP, Wyndham, Wyndham Grand, Waterwalk, Echo Suites, Dazzler, Registry Collection, Esplendor, Dolce and Vienna House. WYNDHAM Hotels and Resorts Inc. has experienced a substantial decline in its stock price over the past year, with shares dropping 14.73%. and reflecting a minus 16% total shareholder return. The primary causes of this decline include disappointing Q3 2025 financial results, which fell short of market expectations, and lowered full-year guidance due to weakening travel demand and declining revenue per available room, RevPAR. Additionally, the company's RevPAR declined by 5% year-over-year in Q3 2025, with a notable drop in the U.S. market. The broader challenges in the hospitality sector, including fluctuating travel demands and economic uncertainties, have also contributed to WYNDHAM's stock price decline. Furthermore, tax loss selling pressure has added to the downward trend, as investors seek to offset losses by selling shares of companies that have declined in value. The primary drivers of revenue growth and decline can be summarized as follows. Revenue growth is primarily driven by higher ancillary revenues from co-branded credit card programs, larger global system expansion, increased accounts receivable due to seasonality, and development advance notes and loan receivables in support of growth strategy. Additionally, fee-related revenues have increased by $37 million. On the other hand, revenue decline is primarily driven by lower royalty and franchise fees, marketing, reservation, and loyalty revenues, as well as a decrease in average daily rates in the United States, globally, and internationally. Net income and profit margins. A year of growth, the company's net income has experienced significant growth over the past year. In Q3 2024, net income was $102 million, increasing by 3% to $105 million in Q3 2025. This upward trend continued throughout the year, with a notable 24% increase from $204 million in YTD 2024 to $253 million in YTD 2025. Profit margins have also seen substantial improvement. Operating income margin increased from 43.2% in Q3 2024 to 46.6% in Q3 2025, while net income margin rose from 25.8% to 27.4%. The year-over-year growth in profit margins is attributed to higher ancillary revenues, driven by the expansion of co-branded credit card programs and increased royalty rates. However, a notable exception was seen in the hotel franchising segment's adjusted EBITDA margin, which decreased from 56.6% in 2024 to 59.7% in 2025, despite a 2% increase in adjusted EBITDA. This anomaly highlights the complexities of the company's financial performance and the need for continued monitoring and analysis. The company's financial performance indicates a significant improvement in its ability to generate cash from operations. A comparison of the net cash provided by operating activities reveals a substantial increase from $156 million in 2024 to $215 million in 2025, demonstrating a positive trend in the company's operating cash flow. This upward shift signifies that the company is effectively managing its resources and generating sufficient cash to support its business operations, indicating a strong financial position. The company's debt level and interest expenses have undergone significant changes. The total liabilities increased by $190 million, primarily due to a $164 million rise in outstanding debt. Long-term debt specifically rose from $2,420 million in 2024 to $2,582 million in 2025. Interest expenses also saw notable increases. Over the first 9 months of 2025, interest expenses jumped from $93 million in 2024 to $103 million, representing an 11% rise. The net interest expense increased by 6% due to a higher average debt balance. A hypothetical 10% change in interest rates could result in a $3 million fluctuation in annual long-term debt interest expense. Management is optimistic about the company's performance in the hospitality industry despite potential recessionary pressures. The primary focus remains on hotel franchising, licensing brands, and providing related services. To drive growth, management will continue to invest in the business, streamlining operations through restructuring plans and deploying capital to attract high-quality assets and fund technology initiatives. Additionally, the company plans to maintain its commitment to share repurchases and dividend payments, subject to market conditions. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company paid out $96 million in dividends in 2025, as stated on page 4 of the report. Additionally, the company utilized $223 million to repurchase shares in the same year. That concludes the financial summary for WYNDHAM, HOTELS, and RESORTS INC. Feel free to comment below, and I will be happy to answer them when possible.